Hello traders, Gary Wagner here. It is approximately 9 o'clock in Honolulu, 3 o'clock in New York on Thursday, 14th day of August, 2025, and this is the evening report for gold and silver. An interesting day in which gold prices declined, with dollar strength adding to gold's decline, and ongoing tariffs helping gold to the upside. A U.S. data report showed hotter than expected inflation and a resilient labor market. The government today released the Producer Price Index, which revealed that prices rose by 0.9% month on month in July, in actual numbers increasing to 149.67 points in July from 148.27 in June, year over year. While this news would typically give gold a bullish tailwind, moving it higher, it is the fact that these higher levels have decreased the probability of a either jumbo or 0.25% rate cut at the September FOMC meeting from 94.3% probability to 92.8% probability. This according to the FedWatch tool by CME. The U.S. dollar gained 0.44%, taking the index to 98.225. Gold traded to a low today of $3,375.50, avoiding our good till canceled stop, with December gold currently down $20.80, a net change of 0.61%, fixing a troy ounce at $3,386.40. We are looking at a 1-hour standard candlestick chart of December gold. We can see gold's open right here at $3,410 and the high during the same hour at $3,411.20. We can see that after recovering slightly, trading back up to a closing value of $3,404, gold methodically traded lower throughout the session up until the last 3 hours, the current hour right now, taking gold to $3,887. What I find most interesting is when we look at how gold is traded since the 8th of this month, we have seen it come down from the record high levels over 3,500, meander down to find some support right around 3,400, move back higher as high as 3,418, and then in regards to today, we had news about higher inflation, not only in the PPI report, but the CPI report yesterday. And what market participants seem to be focusing on is not the tariffs, which will continue to garner more inflation, and not the latest reports, which verify that being the case, but how it will possibly affect the decision of the Federal Reserve in September. While a rate cut is a welcome choice and would absolutely provide bullish momentum for gold, it is irrelevant in my eyes if we see inflation begin to spiral. And at some point, traders and institutional investors will have to come to odds with that if, in fact, as I suspect, inflation will grow much larger than we have originally anticipated, because inflation did not show great advances earlier as tariffs were just beginning to bite, and now the tariffs are becoming more and more in place, and prices are being added, as we see through the Producer Price Index, which of course is the precursor to retail inflation. I think that that could be alarming, and that could change the overall market sentiment towards gold. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.